Wall Street suffers a sharp sell-off as market heavyweights Alphabet and Tesla face steep declines amid growing concerns over AI overspending. Adding to the market pressure, Brent crude reaches $100 per barrel, further weighing in on investor sentiment.
As tensions heat up in the Middle East, U.S. Secretary of State Marco Rubio has responded to Iran's eye for an eye threat with a head for a head warning. He adds Tehran is paying a very heavy price for the action it is taking.
U.S. President Donald Trump says a nuclear deal between the U.S. and Saudi Arabia is subject to Riyadh joining the Abraham Accords, recognizing Israel. The development comes a day after the nations announce a landmark deal that would establish a civilian nuclear program in the kingdom.
Now, Infosys reports over 8.5% fall in Q1 profit in sequential basis. The company also trims FY27 revenue outlook to 1.5% to 3% down from the previous 1.5% to 3.5% range. Tech majors also rolls in company veteran Ashish Kumar Dash as the next CEO. Dash to take over the reins from Salil Parekh in April next year.
Higher fuel prices drive Interglobe Aviation into a first-quarter loss despite a 20% boost in total revenue. The surge in jet fuel prices severely pinches profitability, causing the airline's EBITDA margin to nearly halve year-on-year.
Another day of disappointment on Dalal Street with benchmarks grinding lower for fourth session in a row. Nifty gives up 23,900, down about 0.5%. Barring auto, all the other sectors end in the red. Broader markets see sharper cuts.
New wings for Indian aviation could soon be on the cards, quite literally. Sources tell ET Now the government is considering allowing airport operators to launch and run airlines. The proposal, however, is still on the runway, with no discussions held with any entity thus far.
Centre undertakes a major export-focused policy move allowing foreign direct investments in the inventory-based model of e-commerce exclusively for exports. However, DPIIT says relaxation will not apply to domestic B2C market.
Hello and a warm welcome. You're watching Business at 9 with me, Jude Sanat, and Shibani Garat right here in the Mumbai studios. There's an action-packed bulletin lined up ahead. Lots of market action as well, involving a CEO-designate at Infosys and the government also allowing airport operators to operate airlines.
Indeed, Jude.
Going forward. But let's begin this edition of Business at 9 with a look at how U.S. markets are faring this Thursday. Wall Street is under sharp pressure, with the Dow Jones Industrial Average falling 1%, the S&P 500 down 1.1%, and the Nasdaq Composite tumbling 2%. Investor sentiment weakened as Brent crude surged above $100 a barrel amid escalating tensions in West Asia. Oil prices, meanwhile, spiked after Yemen's Iran-backed Houthi militant group claimed attacks on 2 Saudi oil tankers in the Red Sea, raising concerns that the conflict could widen and further disrupt global energy supplies. Equities were also down, weighed down, in fact, by a 7% slide in Alphabet. Tesla also dropped more than 13% after the electric vehicle maker posted a big earnings miss for the second quarter.
Right, Jude. Now, U.S. Secretary of State Marco Rubio has said that U.S. President Donald Trump's police is a head for an eye, indicating that U.S. will strike hard against Iran. Listen in to what he said.
I think I saw, guys, I saw Arachi, their foreign minister, who the other day say or something about their policies, an eye for an eye. The president's policy is a head for an eye. I mean, honestly, that's what it's going to be. I mean, they will pay a very heavy price for the things they're doing. They're already paying a very heavy price. You guys don't know it because you don't cover it. You're not in Iran. You're not in the street. They don't have a free media. But they're going to continue to pay a very heavy price. Their industrial base has been decimated. Their defense industrial base has been decimated. They're losing launchers. They're losing radars every single night. They are suffering billions of dollars in damage, and their economy is a disaster. But despite all that, okay, these people who are calling us every day, begging, let's do a deal. They send us messages through other countries, third countries. I mean, they're running out of countries to send. Even I had countries here coming up to me, oh, I just spoke to the Iranians. They want to do a deal. The problem is, every time these people do a deal, they either break it or after they make it, they want to change the deal. So they're probably not ready to do a deal yet, but they will be soon because the price they're paying is very high despite their tough talk and their flowery language and their stupid Lego videos they put out. I've never seen them, but they put these things out on social media. Despite all that bravado, they are suffering tremendously, and they're going to suffer more until they come to their senses. They're not there yet, unfortunately.
And staying with more news from the US, President Donald Trump has announced that Washington is prepared to approve a civil nuclear agreement with Saudi Arabia, but with a key condition. In a post on Truth Social, Trump said the deal would allow only non-military, non-enriched nuclear facilities, and it would be approved only if Saudi Arabia joins the Abraham Accords, the US-backed normalization framework with Israel. Trump stressed that the United States has no objection to Saudi Arabia pursuing civilian nuclear energy, provided there is no uranium enrichment and that the program remains strictly for peaceful purposes.
Right. Now, the government has permitted FDI in an inventory-based e-commerce model exclusively for export purposes, a move which will help increase India's outbound shipments without impacting the business of small retailers. My colleague Sumita gets us more details on this.
That's right. It's a big development as far as the e-commerce sector is concerned because the government has tweaked FTI rules for e-commerce and now it's permitting FTI in inventory-based model of e-commerce, and that's according to a notification by DPIIT under the Ministry of Commerce. And in fact, DPIIT also says that this move is to exclusively boost exports and outbound shipments from India. In fact, it also says that these restrictions will not apply in case of exports of domestically manufactured or produced goods or products. So, of course, this is aimed at boosting exports from India and, of course, integrating India into global supply chains as well. In fact, this notification also claims that FDI is permitted while in B2C e-commerce, but it's not permitted in B2C model as of now. So that's the policy change that's coming for B2B. In fact, this policy change is aimed at boosting India's place in global supply chains and, of course, also to support MSMEs and manufacturers by giving them easier access to international markets. In fact, this will also push global e-commerce firms to use India as an export base for other global markets. And remember, this is something that the government of India has been thinking about. They wanted to give a boost to e-commerce exports from India. So perhaps this policy is going to be a move in that direction. What this means for companies essentially is that this will help them set up an inventory-led e-commerce business in India. They will be able to source goods made in India, and then they can store them in Indian warehouses and then sell them to sort of, people abroad, to customers abroad. So that's the big development that's coming as far as India's e-commerce sector is concerned.
Well, moving on to some corporate action next. In one of the biggest corporate developments this evening, Infosys has tapped in 30-year company veteran Ashish Kumar Dash as the next CEO who will take over from Salil Parekh once Salil's term comes to an end next April. Dash currently serves as Executive Vice President and Global Head of Services, Energy and Sustainability, among other verticals at Infosys, and has expressed his excitement about leading the company through one of the most transformative periods in the technology industry. Moreover, the tech giant has also reported earnings for the quarter gone by. Infosys reported over 8.5% fall in Q1 profit at about 7,769 crore rupees, while revenue grew nearly 4%, coming in at about 48,211 crore rupees this quarter. Meanwhile, large deal TCV stood at about $3.6 billion for the quarter gone by. However, the company has trimmed its FY27 revenue outlook to the range of 1.5 to 3%, down from the previous 1.5 to 3.5% range, leading to a sharp sell-off in Infosys ADR. In fact, let's listen in to what Nandan Nilekani had to say on the appointment of Infosys' new CEO.
Our new CEO, who will take over on April 1st, 2027. He's from Infosys. He's been somebody who is a true blue Infoscion. He has worked in Infosys for 31 years. He's worked in every part of Infosys, be it in delivery, be it in sales, be it in account management, starting a new DC in Bhubaneswar, everything. And he's someone who I think everybody likes, respects. He's an uncomplicated guy who focuses on what needs to be done. His name is Ashish Dash.
Now, ET Now's Mansi Dave questioned the management on what is Infosys' biggest advantage in terms of AI. Let's listen in.
Well, absolutely. IT major Infosys quarterly results have come in with a management change headline this time. And of course, Infosys has announced its Q1 FY27 results. And along with that, the company has approved the appointment of Ashish Kumar Dash as CEO-designate. Talking about the numbers, in terms of the revenue performance, the revenue came in at $5 billion, which is an up move of around 0.8% on a quarter-on-quarter basis, which is slightly ahead of our estimates. In terms of revenue, profit and margins, the number are in line with our estimates. In rupee terms, revenue stood at 48,211 crore, which is up around 3.9% on a quarter-on-quarter basis. In terms of the profitability, the EBITDA rose around 4.3% on a quarter-on-quarter basis, beating the street expectations, and the margins remain stable at around 21%, indicating healthy operational efficiency. However, the net profit is a concern because it came in and declined at 8.6% on a quarter-on-quarter basis, largely missing the previous quarter's performance and slightly below expectations. Talking about the business highlights, the constant currency revenue growth improved to 1% compared to 1.3% decline in the previous quarter. Free cash flows remain strong at 9,051 crore with an impressive 116% conversion of net profit. And large deal wins, which were one of the key monitorables, they stood at $3.6 billion, slightly lower than last year's $3.8 billion, but still a healthy number. Attrition did increase marginally to 13% from 12.6%. And lastly, about the guidance and the takeaway, Infosys has maintained its FY27 operating margin guidance at 20 to 22%. Revenue growth guidance has been narrowed to 1.5% to 3% in constant currency versus the earlier 1.5 to 3.5%, reflecting a slightly cautious outlook. Takeaways, overall, it's a mixed quarter. Revenue margins and cash flows are encouraging, but the decline in profit and the slightly lower upper end growth guidance suggests demand visibility remains moderate. Investors will closely watch out the deal conversions and growth momentum in the coming quarters.
Well, that was Mansi there breaking down the latest earnings numbers from Infi, but she also got to interact with the management today on the quarterly results. Let's listen into a slice of how that conversation went.
Hello, good afternoon, Salil and Jayesh. Nice talking to you. Salil, my questions are on client spending, large deals and competitive positioning. So talking about the client spending, client budgets remain selective across industries. Have you started seeing any improvement in discretionary technology spending, or are enterprises still prioritizing cost optimization over transformation? Talking about the large deals, Infosys has maintained a healthy large deal pipeline. So how confident are you that these deals will convert into faster revenue growth? Also, every global IT company today is talking about AI. What would you say is Infosys' biggest competitive advantage in this AI-led technology cycle? And please start with this one. Which moment during your tenure best reflects the values and culture of Infosys? Thank you.
Okay, there was a few, so I'll start with the first was a conversion of the TCV discussion. I think we see that, you know, the large deals, we see a good traction of those. The values over the last few quarters have been strong. This quarter was pretty good. We see the pipeline to be pretty good on the large deals, and we feel there's a benefit of the consolidation that we are seeing in some of the large deals, which is definitely helping us as we go through it. The conversion, whether it's faster or slow, it's more, I think it's at the same type of a level, and we will convert those into revenue. With 61% net new, it already looks pretty strong in terms of the net new work, which we'll see. And obviously, the renewals are going pretty okay as well there. On AI, I think there's a huge differentiation that I find from what we are sort of working on. First, we have a very clear AI strategy with the 6 areas of focus. We are investing in it. We've actually taken, and Jayesh has shared in the past, he'll share also today, we have invested in building out AI capability. We have, as I shared earlier, 8% revenue growing double-digit Q on Q over the last several quarters. We have a good pipeline in that area. Then you look at some of the stats. We have 80,000 people working on the tools today for client work. It's not just training and so on. Then what we built with Fabric, I feel, is very differentiated because it allows clients to maintain control of their data, maintain control of what they want to do with the AI, and still use the different models, use lower costs. We have a harness through which they can leverage what they want to achieve with the foundation model. So that is a significant move up in terms of differentiation that we've seen. I think in terms of values, my sense has always been Infosys has incredible values, and it's really been sort of a privilege to be associated with that and learn from it and contribute to it. So in many ways, it's a great sort of fortunate thing that could happen in the way that it has happened.
Now, Interglobe Aviation swings into loss in the first quarter of FY27 amid sharp rise in fuel costs. The airline major posted loss of 382 crore versus profit of over 2,100 crore in the same quarter last year. The loss comes in despite 20% jump in the revenue as aircraft fuel expense nearly doubled to over 10,800 crore. We have Avi breaking down the numbers for us.
Interglobe Aviation's Q1 FY27 results have come out, and let's have a look at them. The revenues have come in line with the estimates at 24,584 crore rupees, which is exactly what the street was estimating. But EBITDA, which is a key operating metric for the aviation industry and for Interglobe as well, have come in way below the estimate. They have come in at 3752 crore rupees against the estimate of 5633 crore rupees, so which is a big miss. And the reported PAT, which was expected to be in the range of 1650 crore rupees, has turned out to be negative, and they have reported a loss of 382 crore rupees. So all in all, a very poor set of results from Interglobe Aviation, wherein although the top line is in line with the estimates, but there is a big miss on the EBITDA and reported PAT.
Moving on, the Standing Committee on Finance has submitted its report on Securities Market Code 2025 to the Lok Sabha. The bill was introduced in December last year and was referred to the Standing Committee for a detailed review. Now, the panel has suggested a clear division of powers between SEBI and RBI under the Securities Market Code. In fact, Kuldeep is here with the key takeaways from that report.
Well, the Parliamentary Standing Committee on Finance has submitted its 36th report on Securities Market Code 2025 in Lok Sabha. Well, the committee stated that it has received over 1,000 suggestions from more than 70 stakeholders, and after examining those suggestions, it has made several recommendations to the government with respect to the Securities and Markets Code 2025. Well, we must tell the viewers here that the SMC bill was introduced in Lok Sabha in December 2025 and was subsequently referred to the Parliamentary Standing Committee on Finance. Now, the key recommendations of the committee includes one on the virtual digital assets. In fact, the committee has recommended that the government comprehensively examine the need for an appropriate statutory and regulatory framework for virtual digital assets. Pending the establishment of a comprehensive legislative framework, the government may consider introducing an interim regulatory mechanism through recognized self-regulatory organizations operating under the oversight of the designated regulator. Apart from this, the committee also recommended increasing the cooling off period for a SEBI chairperson and whole-time members. The committee recommended amendment of clause 5 of subsection 6 to raise the cooling off period for the SEBI chairperson and whole-time members from 1 year to 2 years before they can take up any employment or appointment with a securities market service provider or market participant or related entity. The committee also recommended a statutory period of 1 year instead of 180 days for completion of investigations by the investigating officer, while retaining the possibility of a case-by-case extensions. Now, with respect to clause 16, which introduces limitation period of 8 years for directing investigation into a default under the code, the committee observes that such a formulation is unduly broad and may result in uncertainty for regulated entities. The committee recommended that power to direct an inspection or investigation beyond 8 years is excised only in narrowly defined and exceptional circumstances. Now, the committee has submitted this report in the Lok Sabha. Following this, the government will examine. In fact, as per the committee members, the government has agreed to accept and make changes based on the multiple recommendations that the committee has given. After implementing or making the changes based on these recommendations, the government will introduce a fresh bill on Securities and Markets Code in the Lok Sabha for the introduction and for discussion and passing.
Right now, after reports that government is mulling allowing airport operators to run airlines, government sources say policy-level discussions have been initiated, but no discussions have been held with any entity on this matter so far. Kuldeep gets us more details.
Well, the government has been mulling to allow airport operators to run airlines. That's what we have been hearing from our sources. In fact, what we have learned is that the policy-level discussions have initiated on this matter, and the objective is to make civil aviation sector more competitive, especially after the Indigo fiasco. What we have seen that the passengers got stranded at airport for longer hours. So what we have been told by the sources is that so far the government has not held any discussion with any entity on this matter, and in fact the discussions with stakeholders are likely to be held in due course. Sources also told us that the government has been exploring more options to encourage greater participation in the sector. In fact, recently or the last year, in fact, the government had given license to 3 companies, Al Hind, Fly Express and Shank Airlines. However, none of the companies have started operations so far.
Moving on, India has achieved a major breakthrough in long-range air defense. The DRDO has successfully conducted the maiden test flight of its long-range surface-to-air missile Kusha from the APJ Abdul Kalam Island off the coast of Odisha. Kusha is a missile system and is capable of neutralizing a wide variety of aerial threats, including fighter jets, missiles, unmanned aerial vehicles, and large enemy aircraft within a wide range and an altitude envelope.
Now, the NEET paper leak row continues to dominate national headlines. With protests intensifying, the government has stepped in. Prime Minister Narendra Modi has promised fast-track courts and strict action against those behind the leaks, but protesting CJP aspirants remain unconvinced, demanding Education Minister Dharmendra Pradhan's resignation. Joining the protests, opposition MPs are now marching towards Gandhi.
The Mumbai metropolitan region continues to witness an intense monsoon spell with heavy rainfall disrupting normal life across the city and neighboring districts. In fact, the India Met Department has issued an orange alert for Mumbai, while Palghar remains under a red alert as extremely heavy rainfall is expected over the next 24 hours. Dramatic visuals from Dahanu in Palghar show flash flood-like conditions with roads submerged and water levels rising rapidly after incessant rain. However, on a positive note, Modak Sagar, an important source for Mumbai's water supply, has started to overflow after months of alarmingly low levels of water.
And from one global sporting spectacle to another one now, the spotlight now shifts to Glasgow, where 2026 Commonwealth Games get underway today. And even before the opening ceremony, India has already assured itself a medal. Olympic medalist Lovlina Borgohain has, in fact, received a first round bye in the boxing competition taking her directly into the semi-final. She will now face Tuvalu's TKBP Tafaki on July 31st, as her medal is already guaranteed.
And with that, it's a wrap on Business at 9 from Shibani and myself right here in the Mumbai studios. Thank you so much for watching. From the both of us, it's good night and goodbye. The news, however, will continue early in the morning. So keep watching ET Now.